Good morning, traders. Good morning, good morning, good morning. Good afternoon, good evening, depending on where you're connecting from. Can you hear me? Can you hear me? If you can hear me loud and clear, please drop a comment. Drop a comment if you can hear me loud and clear. Also confirm you can see my screen. How was your weekend? You all are welcome. You're welcome to today's live stream. If you have any question, if you have any pair you want me to analyze, please let me know in the comment section. Let me know the pairs you're planning to trade today. Let me know in the comment section. I'd also like to know your buyers on those pairs. You all are welcome. It's another beautiful morning, beautiful week. Another opportunity to make some cool cash. You all are welcome. You're welcome. I want to believe you're fully prepared for the week. Please confirm you can hear me loud and clear. Good morning, Ebuka. Good morning. Let's wait for others to join the class. If you have any question, if there's any pair you want me to analyze, let me know in the comment section. Good morning, Rotesco. Okay, USD JPY. Okay. So let's start by looking at the fundamentals for the week. Okay, so today is Monday, the 16th of June. As you can see, there are no major news. So today we might not experience high volatility in the market. When there are no major news, most times the volatility is very low. Okay, and it also gives us a high probability of our technical setup playing out. Okay, so if you see a good technical setup, a buy or a sell, go ahead and execute the trade, set your stop loss and your take profits. Okay, and then tomorrow Japan will be releasing its policy rates, monetary policy statement, and Bank of Japan press conference would also hold tomorrow. So we should expect high volatility on JPY pairs tomorrow. The time is not stated, okay? And by 1:30 tomorrow, core retail sales, United States core retail sales will be released by 1:30, okay? And on Wednesday, Great Britain will be releasing its CPI data, so we should expect high volatility on GBP pairs on Wednesday. Then by 1:30 p.m., United States will be releasing its unemployment claims. Then by 4:15 p.m., Canada, the Bank of Canada governor will be speaking. So we should expect high volatility on Great Britain pounds, US dollar pairs, and also card pairs. And by 7 p.m., FOMC economic projections, FOMC statement, and FOMC press conference would hold on Wednesday. So we should expect high volatility on USD pairs on Wednesday. Then on Thursday, Australia will be releasing its employment change data and unemployment rate by 2:30 a.m. Nigerian time. And by 8:30 a.m., Swiss franc will be releasing its monetary policy statement and rate. Okay, so we should expect high volatility on CHF pairs, Swiss franc, on Thursday. And also GBP, Great Britain will be releasing its monetary policy statement and official bank rate on Thursday. So we should expect high volatility this week. As you can see, we have lots of major news to be released from the different countries. So we should expect high volatility. Then on Friday, 7 a.m., Great Britain will be releasing its retail sales data, and Japan will be the Bank of Japan Governor Ueda will be speaking also on Friday. So this week will be a very volatile week in the market. So you need to be conservative. You need to manage risk as a professional trader. Okay, don't over leverage this week. You have to be conservative. Ensure you apply stop loss on all your trade. Okay, use the appropriate lot size for your account size. Okay, very important. Okay, so that's it for the fundamentals. So let's go to the chart. First thing I want us to look at is the DXY, dollar index. We need to know the strength of the dollar index to know which direction to follow on currency base. Okay, so let's start with DXY. Before you analyze currency pairs, it's very important that you analyze dollar index. Okay. So let's start with the weekly time frame. As you can see, last week was strongly bearish for the dollar. You can see it was strongly bearish. Few minutes. Okay, so as you can see, liquidity that was residing at this previous low, which was several weeks ago, this low, the liquidity residing at this previous low was cleared last week. And after the close of last week candle, if we go down to daily time frame and we are able to identify a bullish reversal pattern on a daily time frame, we should expect retracement on DXY. Though the trend is still bearish for DXY, we should expect a little retracement on DXY before going bearish. Okay, so as you can see, last week on DXY we had what looks like an inverted hammer, and I think after the formation of this inverted hammer, this candle that looks like an inverted hammer, this is not a valid inverted hammer. Okay, I believe if you go down to lower time frame, 4 hour, 1 hour, I'm sure you'll be able to identify a bullish reversal pattern on those time frames. So we had what looks like an inverted hammer on 4 hour time frame, and after the formation of this inverted hammer, I'm sure a fair value gap was created on a lower time frame. So you can see on 1 hour a fair value gap was created. I believe you can see, and price just filled that fair value gap. You can see that price just filled that fair value gap. You see the fair value gap on 4 hour. You can see price just filled that fair value gap. So I like to see the pattern that formed on 1 hour and 15 minutes time frame. If I'm able to identify a bullish reversal pattern on those time frame, I would be buying the dollar today. I would be going bullish on the dollar. Okay, so let's go down to 1 hour time frame. Let's see what we have on 1 hour time frame. Okay, so you can see the pattern we had on 1 hour time frame. The previous candle, you can see the previous 1 hour candle closed as a doji, and before the formation of the doji, we had a spinning bottom. Okay, we had a spinning bottom, and also on 1 hour time frame, you can see that we have this fair value gap. So they might want to come fill this fair value gap. You can see this fair value gap we have on 1 hour time frame. Okay, so you might want to wait for them to fill this gap before going bullish on the dollar. So that's my take for the dollar. Okay, my bias for dollar today is bullish. Okay, is bullish. So wait for a bullish reversal pattern to form after this fair value gap gets filled. Okay, it's either this fair value gap gets filled, or you wait for a 1 hour candle to close above the high of this fair value gap before you buy. I hope that is clear. If you want to buy the dollar today, wait for this gap to be filled, or wait for 1 hour candle to close above the high of this fair value gap before you go bullish on the dollar. Okay, so I would expect the dollar to come. You can see, okay, on 1 hour time frame, you can see that the dollar created a fair value gap here. You can see this. So I would expect dollar to come back to fill this fair value gap it created here. You can see this fair value gap. So I'm buying the dollar, I'm buying from this zone, from this level, then my target will be this fair value gap, this buy side imbalance. I hope that is clear. So that's my take for the dollar. I'll be buying the dollar, and hopefully dollar could come, you can see this liquidity residing at this relative equal high. Okay, it could also retrace to come clear the liquidity residing at this previous high, this buy side liquidity. If you go back here, you would see we had a fair value gap here. This retracement was used to fill this fair value gap. Okay, you can see this fair value gap here. You can see this retracement was to fill this fair value gap. And you can see the strong rejection after the fair value gap got filled. You can see that. So they might want to retest that level again today. Okay. I think the sells on dollar would be maybe on Wednesday. If you're considering selling the dollar, you should look for sell on Wednesday. Wednesday after FOMC. After FOMC meetings. Okay, that would be the right time to look for sells on the dollar. But before Wednesday, I think dollar will be bullish before Wednesday. Okay, that's what I see on the chart. I might be wrong. Okay, I might be wrong, but based on price action, I think dollar would be bullish. Okay, next let's look at yen basket. Before trading yen pairs, it's important to know the trend on yen basket. Okay, very important. Don't just execute trade on yen pairs without knowing the trend on yen basket. You'll be trading blindly. Okay, so on yen basket, okay, so let's start with the weekly time frame. If there's anything I want me to analyze, please let me know in the comment section. Let me know in the comment section. Okay, so last week candle closed as a doji, and a doji candle indicates change in trend from bearish to bullish. Okay, it closed as a doji. So let's see the pattern we had on daily time frame after the close of the doji. Okay, so we had a bullish reversal pattern. You can see the daily time frame. We can see what we had here. On the daily time frame, you can see we had a fair value gap here, which I believe could be the reason for the retracement. You can see that fair value gap. And after price fills that fair value gap, I'm sure, let's go down to lower time frame. Most likely there's a fair value gap below this daily fair value gap. That's the reason price broke out from the daily fair value gap. Let's go down to 4 hour. Okay. So this is what we had on 4 hour, no fair value gap on 4 hour. There is a reason price broke out from this daily fair value gap. Let's confirm there is a reason. Let's go down to 1 hour. So good. You can see the fair value gap on 1 hour. That could be the reason price broke out from. You can see this fair value gap on 1 hour. You can see this fair value gap on 1 hour. That could be the reason. You can see the reaction from that fair value gap. Can you see that? Price just, tested this fair value gap. You can see this fair value gap. Can you see that? And price just filled this fair value gap. You can see the rejection. This is the first attempt. This is the second attempt. Can you see that? You can see that. So this is a key support level. You can see this is a key support level. Can you see that? Can you see that? So my bias for yen today is bullish. Okay, my bias for yen today is bullish. Okay, so I'll be considering buying the yen if yen closes above the high of this bearish candle. Okay, I want to see yen close above the high of this bearish candle and the high of this hammer. That is when I would go bullish on the yen. Okay, 1 hour candle should close above 1 hour or 4 hour candle should close above the high of this bearish candle and the high of this hammer. Okay, that will indicate that demand is higher than supply, and when demand is higher than supply, you, you expect price to go up. Okay, so you wait for demand to exceed supply before you buy. Okay, the market is currently at a demand level. This is a demand level. But before you execute the trade, you want to ensure that demand is higher than supply. Okay, so that's my take on the yen basket. Buy yen basket, but if 4-hour candle closes below this relative equal low, we should expect more sales on yen. We should expect more sales. If 4-hour candle closes below this relative equal low, then we should expect more sales. Okay, but at the moment, uh, yen is bullish. Yen is bullish. I hope that is clear. Okay, let's look at USD JPY. Okay, let's start by looking at GBP USD and GBP USD and Euro USD. GBP USD. Okay, so I see GBP USD selling. Okay, it's my take on GBP USD. Let's start with the weekly time frame. Okay, last week was strongly bullish. It was bullish last week. Last week candle was used to clear liquidity residing at this previous high. You can see. Okay, they knew a lot of retail traders would have executed sell and their stop losses will be residing at this previous high. Now this week, this is the liquidity for the week. The high of this week, of last week, is the liquidity for this week. There are a lot of stop losses. You would agree with me that a lot of retail traders would have executed sell because the pattern looks like a spinning top, right? A spinning top. And that's what we teach you, that when you see a spinning top, you should sell, right? That's what you read in most of these candlestick pattern books. So most retail traders have executed sell and their stop losses will be residing at this high or a few pips above that high. And that is where the institutions will want to execute their trades, okay? So let's go down to daily time frame. After the close of last week candle, what pattern do we have on the daily time frame? If we are able to identify a bearish reversal pattern on a daily time frame, then we should be considering selling GBP USD today. Let's see. Good. So you can see the pattern we had on the daily time frame, right? After the liquidity residing at this previous high got cleared, look at the pattern we have. This is an hanging man, right? This is an hanging man, which indicates change in trend from bullish to bearish. And I think after the formation of this hanging man, a fair value gap was created, and that is the reason for the pullback we're seeing in the markets now. Okay, let's go down to 4-hour and 1 hour to identify the fair value gap that was created. Okay, so this is a 4-hour time frame. This is 4-hour time frame. Okay, so let's go down to 1 hour. Let's go down to 1 hour. Okay, so you can see the fair value gap we have on 1 hour time frame. Can you see the fair value gap on 1 hour time frame? We had this fair value gap, and as you can see, the fair value gap has been filled. And look at the pattern that formed there. This is a bearish reversal pattern. Okay, this is a bearish reversal pattern. So this is a bearish reversal pattern. Also on 1 hour, you can see we have this fair value gap. So they might want to fill this gap also. Okay, they might also want to come and fill this gap. Okay, but I think here you can see we had a fair value gap here, it got filled. And if you go back here also, I think that fair value gap is in confluence with this breaker block. Can you see that? That could be the reason price won't come to fill this fair value gap. Okay, you can see that we had a breaker block here. Can you see this? This is a breaker block, and we have another block which is in confluence with this fair value gap. Okay. Also, if you apply your Fibonacci tool from this swing high to this swing low, I think price is at premium at the moment, right? Can you see price is above level 50, right? Is above level 50. You can see that this is 0.5. The market has traded above that level, which is a premium. You can see that. So these are the reasons I'm considering selling GBP USD. Okay, so that's my take on GBP USD. And if you're selling GBP USD from the current market price, ensure your stop loss is above this level. Okay, ensure your stop loss is above this level. So if you take a sell on GBP USD now, 3581, your stop loss should be above this level. So your stop loss should be about 30 to 35 pips. Okay, because they could still push price up to come fill this fair value gap. So you don't want to set your stop loss below that zone. Is that clear? And if you are selling, you can see it has created a fair value gap here. Okay, so that could be your target. Like I said, today there are no major news for the dollar, so the volatility might not be that much. Okay, so you shouldn't aim for too much today. If you are risking 30 pips, you can go for 50 pips. If you are risking 20 pips, you can go for 40 pips. Don't aim for too much today. Okay, there won't be much volatility in the market. I hope that is clear. If there's any pair you want me to analyze, please let me know. Let me know. Without taking the trade on GBP USD, okay. A few minutes, please. I want to take the trade on GBP USD. Sell. Okay. Keep dropping your questions. Keep dropping your questions. Few minutes. I don't want to miss this trade. Few minutes. Keep dropping your questions. Selling GBP USD. Okay. GBP USD, and I think. Okay. GBP USD sell. Okay, let's move to the next pair, Euro USD. Okay, so you can see Euro USD. Oh, this is a nice setup on Euro USD. This is a nice setup on Euro USD. This is a nice one. It's a nice one. Let's start with the weekly time frame. Okay, so last week, GBP USD was strongly bullish. Strongly bullish. Liquidity residing at the previous high was cleared. Okay. This high, the liquidity residing on this previous high was cleared last week. You would agree with me, a lot of retail traders have executed sell after the formation of this shooting star candle, and their stop losses will be residing at this high or a few pips above this high. So last week, what they did was to clear the liquidity residing at this previous high. And as you know, price moves from internal liquidity to external range liquidity. That's how price moves from internal to external, from external to internal range liquidity. So what they've done here is to clear external range liquidity. The next is to go fill fair value gap, internal range liquidity. Okay, so they've cleared external, then we expect price to retrace back to an internal range liquidity. Okay, so you can see on the daily time frame, you can see the pattern we have on the daily time frame is similar to what we have on GBP USD, and that's because both pairs are positively correlated. By that I mean 70 to 80% of the time, GBP USD and Euro USD move in the same direction. Okay, so you can see here we have an internal range that was created. So price is expected to pull back to come and fill this internal range liquidity. So if you are considering buying Euro USD, you should wait for price to come fill this fair value gap it's created. Okay, you should wait for price to come fill this fair value gap it's created before you buy. This is where I'll be considering buying Euro USD this week, this zone. Okay, but for today's market, I'm considering selling. Now, after the formation of this candle, if you go down to 4-hour time frame, think a fair value gap was created on 4-hour and 1-hour time frame. That is the reason for the retracement. Okay, so let's go down to 1 hour. Okay, so you can see the fair value gap is created on 1-hour time frame. And you see, you can see the fair value gap is created on 1-hour time frame. Price just filled that fair value gap, and you can see the patterns, the candlestick patterns. You can see the previous 1-hour candle was a doji. You can see that previous 1-hour candle was a doji. The previous one was a spinning top. This indicates that the buyers are becoming weaker, right? They are becoming weaker. Okay, so this is a sell setup. Also, you can see on 1-hour time frame, you can see we had a mitigation here. This is a mitigation. Sorry. If you apply your trend line, okay, price was mitigated at this point. Few minutes. You can see. Let's apply. Here's the trend line. Okay, so you can see price was mitigated at this point. You would also see that this fair value gap, you can see this fair value gap is in confluence with this mitigation block, or you call it your, is this support stone? Yeah, support stone resistance. Okay, the mitigation block and breaker block is same as support stone resistance, resistance stone support. Okay, so this is the breaker block here. You can see this resistance, yeah, support stone resistance. You can see mitigation block, so it's in confluence with this fair value gap. Can you see that? So that should be a sell. Okay, that's what I see on Euro USD. That's a sell setup. That's a sell setup on Euro USD. If you are considering selling, your stop loss should be, you can use this high. So if you sell from the current market price 1.1578, 1.1614, that's about 36 pips. That's about 36 pips. Okay, 36 pips. So the market risk is what will determine the lot size you would apply on the trade. Okay, the market risk will determine the lot size you would apply on the trade. Okay, so that's my take on Euro USD. Okay, so you can see on Euro USD we have this fair value gap here. Okay, we have this fair value gap here, and I think price is going to come fill this fair value gap. What they've done this morning is to clear the liquidity residing at this previous high. You can see they know a lot of retail traders have executed sell. Okay, after the formation of this shooting star, many retail traders have executed sell. So what they did this morning was to come clear the liquidity residing at this previous high. You can see that, and what they did was to create a liquidity, sell side liquidity. You can see this low here. A lot of retail traders would have bought, right? After the formation of this candle, a lot of retail traders would have bought, right? Because this is a spinning bottom, and the next candle closed bullish. So most retail traders would have bought from this point. And where would they have their stop loss? Their stop loss is residing at this previous low. And I'm sure they will come for the stop losses. They will come with the liquidity residing at this previous low before going bullish. That's what I see playing out on Euro USD. And like I said, I would like to see Euro USD come fill this fair value gap. Okay. Okay, this fair value gap, you can see this fair value gap is created on a 4-hour time frame. I would like to see it come fill this fair value gap. Okay, and also we have this low here that they might come for this low. So that's what I see playing out on Euro USD. My bias for today's market is bearish for Euro USD. Okay, so let's move to the next pair. USD JPY. Okay, a few minutes. USD JPY. USD JPY. If my bias for yen is bullish, then should be looking for sells on USD JPY. Okay, let's see USD JPY. So you can see what's playing out on Euro USD. You can see. So let's start with the let's see the weekly chart. You can see Euro on USDJPY has been selling. The past few hours, Euro USDJPY has been selling. So what do we have on last week candle? You can see it's closed. Looks like hanging man. Yeah, this is an hanging man pattern, right? It's an hanging man. So let's go down to daily. Let's see how last Friday candle closed. So you can see what's playing out here. Last week we had, you can see a shooting star candle. You can see this is a shooting star candle, and I think a fair value gap was created after the formation of this shooting star candle, which is the reason for the retracement we are seeing in the market right now. Let's go down to 4 hour. So you can see, let's see 4 hour. So on 4 hour, we had the fair value gap here. This is the fair value gap on 4 hour. But you can see that price broke out from that fair value gap. There is a reason for that breakout. Okay. It means there's a fair value gap above this fair value gap on 4 hour. Let's go down to 1 hour. There is a reason price broke out from that fair value gap. So you can see on 1 hour, you can see this fair value gap on 1 hour. You can see. So this is the reason. This is the reason price broke out from the 4 hour fair value gap. And we had an order block here. You can see that could also be the reason price broke out from this 1 hour fair value gap. You can see because we had an order block here. It could also be that the liquidity. Okay, you could also see here we had a fair value gap here. Can you see? You can see we had a fair value gap here also on 1 hour time frame. You can see that could be the reason price broke out from the fair value gap. This fair value gap you can see, and after that gap got filled, you can see the pattern that formed: a shooting star and an engulfing candle. You can see. So this is a sell on USJPY. USJPY is likely going to come fill this fair value gap it's created here. Okay, it's likely going to come fill this fair value gap. So that's my take on USJPY for today's market. It's a sell. It's a sell. Okay, that's what I see playing out on USD JPY, USD JPY. Okay. Euro USD is set for sell, yeah, it's set for sell. Euro USD is set for sell. Please ensure you apply good risk and money management. Please don't over leverage. Okay, don't over leverage. Trading is a game of probability. No matter how good the setup is, it can still go in the opposite direction. The market is always right. You cannot fight the market. No matter how good the setup is, it can still go otherwise. Okay, so that's why you are advised to always use stop loss. Apply the right lot size. Okay, don't say this is coming from a professional trader. Let me over leverage. Sorry, you just blow your account. Professional. Okay. So you can see what we have on on GJ. It's obvious GJ is bearish at the moment. It is bearish at the moment. Let's start with the weekly time frame. GJ is bearish at the moment. So you can see the pattern we have on GJ is similar to what we saw on UJ. Okay, so last week candle closed as an hanging man, a bearish hanging man, which indicates change in trend from few minutes, please. Okay. So last week candle closed as hanging man. Let's go down to daily time frame. Let's see the pattern on the daily time frame. Okay, so this is what we had on a daily time frame. We had an hanging man. We had spinning top. So price just tested the resistance area now. You can see this resistance area. Price just tested that area, but let's go down to lower time frame. Let's see if we can identify fair value gaps on lower time frame. Okay, so previous 4 hour was bullish. I think what they did with this 4 hour candle, the previous 4 hour candle, was to clear the liquidity residing at this previous high. They know a lot of retail traders would have executed sell after the formation of this hanging man, right? A lot of retail traders would have sold and their stop losses would be residing at this previous high. So the first thing they did this morning was to clear the liquidity residing at this previous high. That's the achieved. So if you go down to lower time frame and you're able to identify a bearish reversal pattern, I think it's best you go for sell. Okay, so you can see the pattern that formed after liquidity got cleared. This is a shooting star. You can see that. And the next candle that closed respected the high of that shooting star. That should tell you that the buyers are becoming weaker. Okay, that should tell you that supply is increasing and demand has started decreasing. That's what it means. So you should be looking for sell. You can't see this pattern and be buying. Okay, you can't see this pattern and be buying. If you look at the charts, look at where GJ started buying. This is where GJ started buying. Okay, you had another opportunity to buy from this point. If you didn't buy from this point, you could have risked buying after this retracement. You didn't buy from this point. Well, why would you want to buy from this point? So if you are considering buying, you should wait for price to retrace. There should be a retracement. If you place your Fibonacci from this swing high to this swing low, it is obvious price is at a premium area, and you don't buy at premium. You don't buy at premium, you look for sales. So it will not be wise for you to buy at a premium area. If you want to buy, you want to see price pull back to a discount area, and at discount area you identify fair value gaps at discount area. So if you apply your Fibonacci from this swing low to this swing high, this will be at discount, and at discount you have this fair value gap. Okay, that could be the next draw on liquidity on GBP JPY. So what I see on GBP is a sell setup. This is a sell setup. Okay, it's a sell setup. Let's see 15 minutes. So this morning you can see what played out this morning. After the swept liquidity, we had an engulfing pattern on 15 minutes time frame, and you can see a fair value gap was created. You can see this gap that was created. You can see this gap that was created, and what happened? Price pulled back to fill that fair value gap. You can see, and after price filled that fair value gap, what pattern do we have here? We had a spinning top and an engulfing candle. You can see that. So this is a sell setup, and after the formation of this engulfing candle, it's likely a fair value gap was created. That's the reason for this pullback. They had to go fill that fair value gap. Let's go down to 5 minutes. You will see. You can see after the formation of that engulfing candle, you can see price pulled back to fill this fair value gap. And after it filled that fair value gap, you can see what pattern, the pattern that formed there, shooting star. The next candle still close bearish. So this is a sell. It's a sell setup. This is a sell setup. Okay, it's a sell. And if you are selling, if you want to take a sell on GJ, your stop loss must be above the high of this candle. As you can see, we still have a fair value gap here that has not been filled. So they might want to come fill this gap, which means your stop loss must be above this fair value gap, which this level will be the best level to use as your stop loss, this high. That should be the level you should use as your stop loss if you are selling GJ. I don't see GJ I don't see GJ buying. I don't see GJ buying from the current market price. Even if it is buying from the current market price, it's very risky to buy GJ from the current market price. GJ will want to come fill all these fair value gaps, which is at a discount area. Okay, so that's my take on GJ. Is there any other pair you want me to analyze? Let me know. Let me know. Is there any other pair? So let's look at gold before we end today's session. Gold. Gold has been selling since the market opened. Gold has been selling. Gold has been selling. Okay, gold has been bearish. It's been bearish. That was my expectation on gold today. Unfortunately, I missed this move. I missed this move. Okay, I missed this move on gold. That was my expectation. Okay, so you can see what they did today. Let's start with the weekly time frame. So you can see what they did this morning. The first thing they did was to clear the liquidity that was residing above the high of last week candle. You know, a lot of retail traders would have sold. If you go down to lower time frame, you would identify bearish reversal pattern on those lower time frame. Let's see 4 hour, 1 hour. You would see a bearish. You can see on a 4 hour time frame last week. You can see after the close of last week candle, you can see the pattern that formed. It's a bearish reversal pattern. And the impatient traders, the retail traders would have jumped in to sell. And where would they have their stop losses? Their stop losses will be residing at the high of last week. Okay, so go down to daily. So we had, you can see, this is daily. Let's go down to 4 hour. You'll see the pattern that formed on 4 hour and 1 hour time frame. You can see the patterns that formed on Friday. Because of, you can see this is a spinning top, and this looks like a shooting star. You can see. So a lot of retail traders would have jumped into sell after the formation of this pattern. So the first thing they did this morning was to clear their stop losses. You can see. And immediately they cleared their stop losses. You can see the pattern that formed. That's a shooting star. And you can see gold has been bearish after the formation of that pattern. After that liquidity got cleared, it's been bearish and it is still bearish. But I'd like to see gold retrace back to fill. You can see it has created a fair value gap. Okay, this is an imbalance in the markets. So the institutions are most likely they want price to pull back, okay, to this zone before they sell. They would like to see price pull back to this zone. Those who have missed this move, those who have missed, because this would have been the best entry after the formation of this shooting star, that would have been the right time to sell. So those who didn't sell after the formation of that shooting star would definitely want to wait for price to pull back. Just as I'm waiting for price to pull back, a lot of people want to see price pull back. This is a fair value. That's why it is called a fair value. This is an area where those who didn't join the trend at this point will want to, take the risk selling gold. You can see. So that's a fair value area. Okay, most will not want to sell gold from this point. Though some people will jump in, some retail traders will be jumping in now to sell, but the risk will be too high. Would you rather sell from this point or sell from this point? Which is fair price? Which is fair price? This is fair price. You can see that. So if you want to sell gold today, wait for price to pull back to fill this fair value gap, and I think gold is coming down to this level. Okay, this is based on what I'm seeing on the chart right now. Okay, this is based on price action. This is technical analysis, not fundamentals. Okay, so I'd like to see gold come fill this fair value gap. This is where, if I want to buy gold, this will be a best area. You can see to consider buying gold. You can see we have an order block here. We had a support, the resistance. Sorry, you can see the support stone resistance. You You can see that. So this would be a very good zone to consider buying gold. Okay, the best risk to take on gold now will be a sell, but before you sell, wait for price to pull back to this fair value gap before you sell gold. That is my take on gold. You've got to be patient. You've got to be patient to execute the trade at the right time and at a very good price. Patience is key. If you want to be a profitable trader, you have to be patient. Patience is key. Okay, so that's my take on gold. Any question, any question, any question? Is there any other pair you want me to analyze? Let me know in the comment section. If you are yet to give the video a thumbs up, please do that now. Please give the video a thumbs up. And if it's your first time joining the live stream, subscribe to the channel so that anytime I come on live, you get notified by YouTube. Okay, subscribe to the channel. Okay, I'm planning to have a session with you guys hopefully tomorrow on risk and money management. Okay, so subscribe to the channel so that anytime I come on live, you get notified by YouTube. We'll be having a session on risk and money management because I know that's where most of you are getting it wrong. That is where most of you are getting it wrong. Okay? So you need to be taught how to manage risk as a professional trader. If you're thinking long term, you should, you should learn how to manage risk. What do you mean, Mr. Raphael? What do you mean, Mr. Raphael? What is enough? What is enough, Mr. Raphael? Let me know. Let me know. What do you mean? Do you have any question, any pair you want me to analyze? Let me know in the comment section. We have less than 3 minutes to end this session. So if you have any question, please drop it now. Drop it now. Any question, let me know, let me know, let me know, guys. Give the video a thumbs up, please. Give it a thumbs up. Give it a thumbs up. Okay, so on USD card, I think they are trying to play smart on USD card. They're trying to play smart on USD card. I think they want to clear the liquidity residing at this previous low before going bullish on USD card. I think they want to play smart. They know a lot of retail traders have their stop losses at this level, so I think they want to clear the liquidity residing at this low before going bullish. Okay. Or let's see if a fair value gap was created here on a lower time frame. Let's see 15 minutes. Okay. So this could be the reason for the retracement. You can see this fair value gap on USD card on lower time frame. You can see this fair value gap. Okay. So two things that will play out that my expectation on USD card, it is either price closes above this fair value gap. If price closes above this fair value gap, you can buy USD card, and or price will clear the liquidity reside at this previous low. So those are the two scenarios that is likely going to play out on USD card. Okay, you can see this candlestick pattern here. This is AMA. They know a lot of retailers that have executed by after the formation of this AMA and this engulfing candle, and their stop losses will be residing at this previous low. So they are most likely going to come for this liquidity. So it's either you buy if 1 hour candle closes above this fair value gap, okay, or you wait for the liquidity residing at this previous low to be cleared. After liquidity at this previous low gets cleared, wait for a bullish reversal pattern to form on USD card before you buy it, and USD card might come fill this fair value gap. Okay, it might come fill this fair value gap. That's what I see playing out on USD card. All right. Okay, so yes, need to go with this one before we go forget it. Okay, you can't forget it. If you forget it, the replay will be available. You can always come back to watch the video. Okay, so that will be all for today's session. I wish you all a profitable trading day. Ensure you apply good risk and money management. So our next session will be tomorrow by 10 a.m. Okay, till then, keep winning. Bye for now.